Welcome to The Explainer. Today we're tackling a crucial topic for so many business owners. How do you get financing for that new piece of equipment when your income isn't a straight line year-round? Well, we're going to break down exactly how you can get approved, even with that seasonal cash flow.
Okay, let's get right into it. You're probably facing this challenge, a pain point that businesses in construction, landscaping, even tourism know all too well. You absolutely need to invest to grow, but your bank account basically follows the calendar.
And here's where it gets tricky. Traditional loans, they demand the same fixed payment every single month. That works in July when you're slammed, but what about February? That mismatch can really strain your finances right when you need to be conserving every bit of cash.
So let's actually put a name to this problem, because it's a real thing. It's called the seasonal squeeze.
Think about it. Standard financing is really built for a linear, month-to-month world. It's just not designed for a business cycle that has predictable peaks and valleys like yours, and that creates a ton of unnecessary stress during your off-season.
So if you're in one of these industries, you are probably nodding your head right now. You know this feeling all too well. Your cash flow is powerful, for sure, but it isn't consistent, and that just means you need a smarter way to handle your financing.
Okay, so what can you do about it? Let's decode your options and find a financing solution that actually works with your business's natural rhythm, not against it.
All right, the first big fork in the road. Should you get a loan or should you lease? A loan is pretty straightforward, right? You're buying it, you're building equity, and one day it'll be all yours. But a lease, now that's all about cash flow. It's about keeping those monthly payments low and preserving your cash, which for a seasonal business can be a huge advantage. Now this is where it gets really interesting. You're looking at two totally different mindsets here. Traditional banks, they're looking at your history. They want to see your credit score, years of tax returns, the whole 9 yards. But private or alternative lenders, they're focused on your business's health right now. They look at your recent cash flow. They're way faster and much more flexible, but yeah, that usually comes at a higher cost. So here's the bottom line. If you need that equipment ASAP to cash in on your peak season, that higher interest rate can easily pay for itself. If you've got time to plan, a bank is going to be the cheaper route.
Okay, let's pull back the curtain for a second. It's so important to get inside the head of the person who's actually reviewing your file. It's not just about the numbers, it's about the story those numbers tell.
And this quote right here, it just nails it. This really shows that big shift in thinking, especially with those alternative lenders. It's becoming less about your personal credit score and way more about the real, day-to-day financial pulse of your business.
You can think of underwriters as financial detectives. They're digging through your bank statements, looking for patterns. They see those seasonal highs and lows? That's fine. In fact, they expect to see them, but they have to be predictable year after year. They're also hunting for overdrafts. Those NSFs are huge red flags, and they want to see that you're smart with your spending during the slow months. It's all about proving your business is stable and well-run despite those fluctuations.
All right, so now that you know how they think, let's build your game plan. This isn't about changing your business. It's about showing off its strengths in a language that lenders can understand and, well, get excited about.
This right here, this is the whole philosophy. The goal isn't to fight against your business's natural rhythm, it's to find financing that flows right along with it. That makes all the difference.
And the good news is, lenders have tools for this. They've built flexible payment structures specifically for businesses like yours. Options like skipping payments in your slow months or making smaller payments, these are designed for you. But here's the thing, you often have to ask for them. So know your options and don't be afraid to negotiate for a payment plan that actually makes sense.
Okay, so here it is, your step-by-step playbook for getting that yes. First, and this is a big one, clean up your bank account for at least 3 to 6 months before you apply. That means 0 overdrafts. Second, have your trends documented. Show them that beautiful, predictable pattern. And third, create a simple cash flow forecast. Show them you have a plan for the off-season. Do these things, and you'll dramatically increase your chances of getting the green light.
Now here's a pro tip that might sound a little backward at first, but trust me, it's a game changer. Apply for your financing before you get busy. Securing that capital ahead of time means you have the cash you need for inventory, for payroll, for all those ramp-up costs. Don't wait until you're already in the thick of it. All right, so where do we go from here? Let's bring it all home with the single most important takeaway.
Look, the right financing for your business is absolutely out there. Your seasonality, that's not a bug, it's a feature. It's not a weakness, it's a predictable pattern. And when you document it properly, it becomes a strength that you can build a whole financing strategy around. So that's the real question I want to leave you with. Is your financing strategy built for your single busiest month, or is it built to support your business for the entire year? Think about that. Thanks for joining this explainer.